About 2 weeks ago, Coinbase released its 2026 Crypto Market Outlook report, noting that key themes for the new year include the macro landscape, tokenization, stablecoins, and regulatory progress. Let's kick things off by talking about regulatory advancements for crypto because many in the industry were hoping to see a crypto market structure bill become law here in the US before we wrap 2025. That didn't happen, in large part due to the longest government shutdown in US history. Are you optimistic we will see progress on that front in 2026?
The short answer is yes. Depending on which prediction market you believe, there's either a positive or negative chance of market structure happening in Q1 and Q2 of 2026. Look, market structure is complicated. Genius Act was not simple, it was transformative, but it dealt with structurally simpler things than market structure bills deal with. So I completely understand why this is taking longer. I completely understand why it's creating more internal fighting around people's view of how this market structure should exist. So it's the kind of bill that, quite frankly, is more foundational for the growth of crypto or any real asset class. And so it should take a bit more time. That being said, I am very confident it will come through. And the reason I'm very confident is the rest of the world is moving forward. We have MiCA in Europe. We have pretty strong regulatory clarity in places like the UAE. And increasingly, Eurozone states are taking up interpretations of MiCA that are transparent, clear, and are creating a good foundation for blockchain and crypto companies to begin working. And I think what we saw in 2024 was this massive flight of talent, of people, of intellectual capital, and of technology growth outside of the US. And part of the rush to get Genius done was to stem that bleeding. And I think once we get back in session and everyone can take time to absorb what's happening, that same burning platform will appear where we really don't want the US to fall as behind as it's been on transformational technologies like artificial intelligence and blockchain. And so I'm very, very confident that once everyone gets a nice break from the holidays and can get back to work, that desire to ensure that the US maintains parity and hopefully dominance in these technologies will get around any confrontations or issues that people are having over the minutia of that market structure bill.
So, what will change for Coinbase and other crypto companies if a crypto market structure bill becomes law in the US in the new year?
Well, if you think about our recent announcement of our system update, our system reboot, where we reintroduced some existing product, but introduced alongside brand new product that creates an all-in-one platform for any institution. And that means commercial entity. It doesn't have to be in financial services, but any commercial institution in the world that wants to engage in the crypto ecosystem. A market structure bill allows for institutions outside of crypto native who are less comfortable with taking idiosyncratic regulatory risk to feel very, very confident engaging their customers on a blockchain or crypto platform. So that could be anything from fashion companies to industrial manufacturers to supply chain companies, all the things they need to do to engage with those customers to trade, receive payments, send payments out, store and transact in crypto. A comprehensive market structure bill makes it possible for those outside of the crypto ecosystem to get comfortable with engaging with the crypto ecosystem. So that's very, very exciting for a company like Coinbase that's looking to service not just financial services firms and crypto native firms and firms that have done the work over the last 5 to 7 years to get comfortable with crypto, but every company in the world that wants to integrate blockchain into their supply chains, into their customer interactions. That's what market structure allows.
Sticking with regulation, we saw the Genius Act stablecoin bill become law over the summer. And since then, we saw more institutions gravitate to stablecoins, with major banks like JP Morgan and Citi expressing interest. What else has changed since there has been a federal framework in place for stablecoins? And what's your outlook for 2026?
So it's a great way to answer again your prior question, which is how will market structure change things for every company? It's the unlock around stable. It's the equivalent to the unlock that the Genius Bill gave to stablecoins. So as you correctly pointed out, since that Genius Bill has been absorbed and thought through, and people understand how to comply with it, we are seeing just the tip of the iceberg on stablecoin launches. It's an incredibly exciting place to be, right? From a very basic perspective, it's a profitable business. It allows you to transact more closely with your customer, to control and own that relationship. There's data embedded in those transactions that's valuable to companies, and individuals prefer the speed, transparency, and rewards incentives that stablecoins can offer. So if you're a company that thinks you have a captive ecosystem, so the example, I teach a class on this at MIT and Columbia universities, and the example I always give is Amazon. So if you wake up tomorrow and you're told you can only transact on an Amazon-based token or stablecoin or some equivalent, and the friction associated with the transaction is 1 penny, meaning it costs $1 to get $1 of Amazon stablecoin. I asked people in the class, how many of you would continue to use Amazon? And almost everyone raises their hand because it's super convenient company to use. And I'll say, what about 5 cents, 10 cents, 15 cents? And it's only at around 9 to 10 cents that people start to say, maybe I won't use Amazon. And so the point being is that companies that believe they have really, really strong brands and really captive ecosystems, think like Disney, Netflix, Amazon, are going to start to experiment with stablecoins. Genius unlocked stablecoins for banks. Genius plus market structure will unlock stablecoins for any company that believes it has a strong enough ecosystem to keep individuals on their economic platform via stablecoin. That's super, super exciting. It changes the game in terms of how you would engage with that brand. It allows for really interesting rewards programs and increases connective tissue between the customer and the company.
Now, in Coinbase's Outlook report, the crypto company notes that crypto markets are poised for transformative growth in the new year as clearer regulation and accelerating institutional integration deepen crypto's role in the core financial system. The CEO of Reserve One told CNBC that she expects increased institutional adoption of Bitcoin in the new year. And in its Outlook report, Grayscale predicted that 2026 will be the dawn of the institutional era. Why do you think so many in the industry are optimistic that 2026 will be a big year for institutional adoption of crypto?
So the ones who are saying that are the ones who have more of an insider perspective on the types of companies that are onboarding. From the outside in, I can completely understand if you're just looking at sort of price action, distance from the industry. It's been pretty muted. It's been pretty stagnant for the last few quarters. This will be the first year out of 12 that Bitcoin will not be the best performing large asset class in the world, or maybe the second year out of 12. So I can understand some skepticism of that if you have just a pure price perspective. For those of us who have the luxury of being on the inside and seeing the incredible degree of onboarding that's occurring across finance, industrials, commercials, every company in the world now has to have a blockchain and AI strategy. If you don't, you have no hope of scaling. And so when you're at Coinbase or Reserve One or Grayscale, you get the luxury of seeing that sort of frenetic questioning and onboarding and companies coming and asking questions about how blockchain fits into their ecosystem. So that's why we're excited, because we know what the queue is. And we also understand, despite all the volatility, despite the relatively muted price action, the crypto ETFs, the Bitcoin ETF and others, were the best performing ETFs launched ever in US markets, ever. And they did that, and this is really, really important, Talia, they did that without being able to be proactively sold by the army of investment advisors and brokers that generally sell these products. So it's a really, really important nuance. These were the single best-selling product in the world, and no one was allowed to make a phone call to sell it or advertise it. That's really, really interesting. And so now that that unlock is happening, where the rules are being kind of fairer now, where investment advisors can sell these products alongside their other products, it's hard not to be excited about that massive institutional onboarding, because we know that the retail market wants it, because they bought more of it than they ever bought a new ETF launch. And so as that regulatory clarity makes it possible for these brokers to sell it, you'll see more and more of these money center banks bring those products onto their platforms so their brokers can sell these products.
Focusing on markets, Coinbase's report notes that the crypto company has a cautiously optimistic outlook as it relates to market trends. The report says that Coinbase believes the U.S. economy remains resilient, with rising labor productivity offering a buffer against slowing headline data. What do you think we can expect when it comes to markets in the new year?
That's why I like working for an exchange, because we don't need to make market predictions. We care more about the integrity and the breadth and depth of volume. But I like the way David put that in our report. Everybody has a view as to what happened with crypto post October 10th, whether it was the China tariffs announcement or whether it was a brief disconnect between money supply growth and Bitcoin price, which historically has been very closely aligned. A lot of folks believe that October 10th, which is a pretty significant liquidity event that occurred in crypto, that there was some sort of hidden massive blow up, like tucked away, unheard of. That's highly unlikely. Those things don't stay secret for long periods of time. I think what happened, quite frankly, was we saw a disconnect between money supply, growth tech, and AI stocks and crypto, caused largely by this sort of frightening event we had on October 10th, which was a significant deleveraging. Now, fortunately, and I think this is testament to the way in which crypto overall has been properly de-risked since we saw things like FTX and others, there does not appear to be any massive blow up or massive insolvency that would cause sort of a concern around the fundamental underpinnings of the market. What we saw were a lot of market makers, a lot of industry participants get overheated. There was a significant market pullback that created margin calls, just like every other market that we've seen hundreds of times over the years in commodities and equities and elsewhere. We saw those market makers have a little bit of fear, and so they appropriately de-risked in the weeks and months after. And so what we're seeing is, instead of one large insolvency that takes $10 billion of liquidity dramatically out of the market, what we probably saw were 10, 15, 20 market makers each taking down their risks by a couple of $100 million. So collectively, you saw a lot of liquidity removed from the system, but it wasn't this violent shock that we had seen before in some of these blow-up scenarios. And so that's why I think we have a cautiously optimistic approach towards the new year. Because again, once everybody can reset their risk parameters, get comfortable that the volume is there, the liquidity is there, the derivatives market continues to grow, and that's really, really useful for these market makers. They can start to scale back in that risk thoughtfully, perhaps slowly, and we can get back up where prices match fundamentals. Because the fundamentals are quite extraordinary, both from a regulatory perspective, institutional adoption perspective. That's all really, really exciting. We've just had a kind of several-month disconnect between price action and fundamentals.
So Clear Street gives Coinbase a buy rating and a price target of $415 in 2026. Fintech analyst Owen Lau, who covers your company, points to certain catalysts, including regulatory milestones for crypto and new product launches. You mentioned some of this, but earlier this month, Coinbase announced it's expanding into stocks, more sophisticated trading tools, and prediction markets as part of a single app brokerage play. The crypto company is also rolling out a tokenization roadmap to lay the groundwork for bringing more traditional assets on chain, including equities. What else can people expect from Coinbase in 2026? And what do you think about Clear Street's bullish outlook for Coinbase in the new year?
Look, if you believe that, as I said before, that every company in the world is going to have an AI and blockchain strategy, and if Coinbase, as the largest regulated provider of these services, certainly in the West, perhaps in the world, if you believe that we're going to be centrally positioned for that, then that's a fantastic outlook for the company. So we now have an offering to allow anyone to white label and create their own stable coin. So think of it like stable coin as a service. We have a wonderful product called X402, which is a hyperscale payments mechanism. Now, this is really, really important because if you believe that we're going to start to have AI agents in 2026 that will be able to transact on our behalf, specifically transacting in large scale via micropayments, then the current financial rails just don't support that. So that's not an interesting growth story if you have to use current financial rails, because you can't do 1 million transactions a day through Venmo or through your bank. X402 and some of the other stuff that we're working on allow for AI agents to make efficient, cheap, fast micropayments using crypto. Now, that's an extraordinary unlock, right? So we think about this world that Elon Musk is talking about, where your cars can be traveling, and instead of fighting over who gets to merge, you can actually create a micropayment transaction to decide who merges or who gets a parking spot, right? So you can financialize almost every human interaction, right? That's this wonderful idea in theory. We can't do that. That's just not, it makes no sense for you and I to negotiate that parking spot every single time. But perhaps AI agents can do that. They can do tax loss harvesting end of year on our behalf. They can optimize during the year in our portfolios. We need payment mechanisms to allow them to communicate with each other. And so that's one piece we're doing. White label stablecoins, another. Prediction markets, I think, are super exciting. I think we've seen a lot of the interest in meme coin transactions shift over to prediction markets. And then finally, lending markets. So I think lending is going to be a big story in 2026, the way stablecoins were in 2025, as more and more people realize they can unlock this $3.5 trillion of crypto value that the world holds, and use it in ways like create yield through staking, also borrow against it in a clean, efficient way.
John D'Agostino, Head of Strategy for Coinbase Institutional. Thank you very much for your comprehensive insight into Coinbase in the new year and for the crypto exchanges outlook in 2026. Happy New Year to you.
Happy New Year. Thanks so much for having me.